Hello, I'm Lelda Smits for the Finance News Network, and joining me today from oOhmedia is its CEO, Brendon Cook. Brendon, congratulations on having just returned to the Australian Securities Exchange.
It's a pleasure to be here.
oOhmedia is an outdoor media organisation which has just listed again on the ASX. Could you explain to us how the company makes money?
Sure. So we have outdoor advertising assets on roads, airports, retail environments, universities, cafes, pubs and social sporting environments. And effectively we provide a platform for engaging consumers when they're away from home. And we do that through a variety of traditional type products right through to new age digital signs that in fact allow us to integrate and engage consumers and their mobile phones in a unique way.
Okay, now the company was taken private in 2012. Can you explain to us why did you choose to return to public life?
Yeah, look, I think the shareholders determined that it was a prime opportunity with the growth profile that the out-of-home market has to relist again. It provided us a chance to recapitalise our debt and position the company strongly to reinvest into digital assets, which are providing this unique opportunity to engage customers. So we're in the formative stages of that rechange of the out-of-home sector to a very new medium, a very new age medium, one that totally takes advantage of the mobility of society and the engagement they have via mobile online. And so the chance was now to re-establish the business into its new position and take the growth forward from here.
If we can look closer at your IPO, your issue price was $1.93. What market cap does that now put on the company now that you've listed, and what PE ratio does that represent?
So we have a market capitalisation of just over 289 million. Which puts an enterprise value of over 365 million and a PE ratio of 13 times.
Your initial public offering was aiming to raise about $170 million. How much did you raise, and where do you plan to deploy the funds?
We raised what we set out to raise, which was exactly 167.3 million. And it allowed us to pay down debt, pay out our deferred payment for the acquisition of iCore from Channel 10, as well as the advisor fees.
Okay, now Champ Private Equity have indicated that they won't sell a stake in the company. Who sold stock into the IPO, and what kind of interest will Champ retain?
None of the existing shareholders sold any stock. The capital raising was only about primary, which is therefore about the debt that existed within the business. Champ have retained approximately 32% of the organisation, WPP around 8%, and management around 1.4%, and the rest being raised on the market.
Okay, now one of the company's rivals, APN Outdoor Group, listed recently. How does oOhmedia see itself positioned in the outdoor media industry?
Sure, we're the market leader with about 34% of the revenue in the industry. We also have the most diverse range of products, as I mentioned previously, across road, retail, airports, cafes, universities, social sporting environments. We also are Reality, a new out-of-home media company. We have the largest array of digital signage, over 1,700 units, delivering the biggest audience reach in Australia. And we've also developed proprietary programs that deliver content and an interaction capability across multiple screens, not just digital screens, but mobile screens as well. So we really see ourselves as taking location-based advertising, connecting it with consumer and being a facilitation with mobile online in the way society is really being an always-on society.
So Brendon, what is the company's reach currently, and where are you targeting for future growth?
So we see ourselves as investing in our existing product range. We currently have over about 40% of the revenue in the road environment, about 70% in the retail environment, and about 70% in the airport environment. And by investing in new digital signage and the way we can engage and interact with customers, we see strong growth moving forward as we continue to take share from the $13.4 billion worth of advertising market that exists from both other traditional media and PC online.
Certainly. So what are your financial forecasts for the year ahead?
Between 2013 and 2015, which is the forecast year, we'll have CAGR revenue growth of about 4.6%. However, that will flow through to EBITDA CAGR growth of over 21%, effectively heading towards $48 to $50 million range in EBITDA. This growth is driven by the fact that we've been able to consolidate, reinvest in our digital strategies and growth strategies via digitalisation and consumer engagement.
Great. And final question, Brendon, how are you aiming to position oOhmedia in its first year of trade back again on the ASX?
We'll continue to invest in our leading portfolio of signs in the various environments with our digital strategy. This digital strategy is designed to take us from 25% of our revenue coming from digital to over 50%. Importantly, it leverages our capability to engage consumers as they're away from home, as we deliver on our strategy of being more than just an out-of-home company, being a new out-of-home company that delivers both mobile and social online engagement, as well as the ability to deliver the traditional outdoor advertising values for our clients.
Wonderful. Well, Brendon Cook, congratulations again on having just returned oOhmedia to the ASX.
We're very excited about the future.